Hey guys, welcome back. This is going to be a bit different from the usual market analysis. We're going to go through an actual day trading breakout strategy that I use. It is my main strategy that I love, and I've just found so much success with this, and I'm really excited to share it with you guys, and hopefully you guys find some use out of it. So starting off with this breakout strategy, these are the two charts that I have up when I'm looking at a stock. I sometimes will switch the daily to an hourly chart as well, but daily is important, okay? And you might think daily, well, this is intraday, why do you need a daily chart up? And you'll see it's really important, guys, that you see the daily trend of a stock. It's super important to see the bigger picture, okay? And over on the right, I have my intraday chart. I either use 5, 10, or 15 minutes. I'm going to show 5 for this video. 5 is totally acceptable. The only thing with breakouts is sometimes in uptrending markets, 5-minute chart will not work quite as well because there's a lot more choppiness, and so sometimes you need to bump it up to a 10 or 15. And I'll kind of explain why as we go. But the first step, guys, is to know your levels, your daily chart levels. So, for example, here on AMD, what I've done, these levels that I have marked, so you can see AMD recently broke up. And so on this down day, before the down day had started, I had two prices in mind, which were those two pivots that we had broken through. So I had marked those, right? You need to mark important levels. If you just broke through two pivots, you need to mark those on your chart. And so the reason I did that is because I had this trend line. And if you're wondering why the trend line is drawn weird, go watch my trend line video. It's a line chart. It's based on, daily candles. And so I've drawn it connecting all these tips on the line chart. There's one little breakthrough, but you can see the trend line, okay? So the point of this, I have a sentiment, a bias that AMD could pull back after this big day, and that's not unnormal. It had an 8% up day. It could pull back, right? So first thing, keep your important levels in mind. And then over on the right side here, you're going to see all these levels that are marked. They're auto-generated. They're scripts. I'm going to go ahead and put those scripts in the description. They're Thinkorswim scripts. If you guys want to use them, I don't own them. I found them online. But they're really cool. So they mark the close of the day from the previous day. And then they mark the pre-market highs and lows right here. Overnight high, overnight low. They mark the low of the day. And then the blue behind is the high of the day from the previous day. Okay. And so these levels are basically what I make my strategy based around. Okay. So let's get started with how I would have played AMD here. There's a few things you guys want to look for when looking for intraday breakouts. First is obviously volume. Whatever way the stock is breaking, when it's breaking at a critical level, you want to see the volume higher than normal, right? What is higher than normal? Well, there's actually a volume average study you can use. I don't have it on, but I mean, just looking at AMD's previous few days here, we can see, okay, yeah, it's had low. I mean, not low, but it hasn't been amazing. And then, okay, how about this breakup? Look at that giant volume, right? And it broke up over all these high levels on these days. That's the kind of stuff you want to see for a high success breakout, okay? And so when I'm looking at AMD here, here's how I would have played AMD. I already have a bias that it's hitting the trend line, and then it could see some downside today. So first is volume. Second, you want the risk reward to be good. So when AMD breaks up here, I don't see the risk reward as being super good. It's okay. And the main reason I wouldn't want to be playing the upside is because of the trend line, because of the 8% rally it just had. It's unlikely that it's going to rally very far again, right? So always have daily chart in mind. Okay, so second, okay, it gets rejected. We can see that now. And so maybe why wouldn't you want to enter, this first down candle? It breaks the pre-market lows. You might be in the moment and be like, yeah, AMD is going to fall. Like, you already had that daily chart bias. But you have to make sure to mark your levels, right? If it's broken through 2 pivots, make sure you have those marked. And wait for candle closes. Price going through a level is not enough. A candle, whether it's 5, 10, 15, whatever you want to use, it has to close below the level. So notice how AMD comes back down. And once it finally closes a 5-minute candle below both of those pivots, it then continues to sell off. So in this case, guys, I wouldn't be entering on a break of pre-market lows because I know these pivots are here. If AMD holds those pivots, it can stay bullish. So how I would play this is on the break and close below those 2 pivots, I can then enter a short trade, right? I can enter a short trade. I personally play options, so I would buy, let's say, 2 contracts. I don't want to play 1. I want to play at least 2 contracts, and I would enter them after this candle closes. If the candle closes too far below, I would enter 1 contract or half a position, and I would wait for a retrace to that level, and that's where I would enter the rest of my position. If the stock comes down to a target, for example, this level I have here, and then comes up and retraces, I don't want to enter the rest of my trade anymore because it's found a support level and it could reverse, okay? Excuse me. So hopefully that makes sense. So in this case, I would take my full position right at once because it barely closed below my important levels. And then this level here, if you're wondering how I got that, that is the closing price from this pivot here, okay? So I saw that as an important level. You can also put retracements on the rally day in this case. If I put some retracements here on this rally day, you can see that's also at about 50% retrace. So it didn't quite get there, but you don't always need to wait for an exact price level. Once it gets down to that area, you can start taking some profit, okay? So in this case, how I like to take profits with this breakout strategy is I set a first target. It doesn't even have to be down here. It can be even closer. But what you want to do is take half of your profits off the table, okay? So let's say here I lock in 10 or 15% on my trade. From that moment on, what you want to do is you want to set your stop loss to break even. So if this stock comes back up and you're at break even, boom, you're out of the trade, okay? And you still profit on that first half, okay? So we can see this AMD trade, I worked pretty well. You would have locked in some nice profits here, maybe got stopped out on the rest. Your second target might have been the 61.8% retrace, okay? And it never really got there. It kind of just went sideways. So not a bad trade, right? And that's how you'd play AMD on this intraday breakout strategy. So let's look at another couple here. Shop is another one that on Friday happened to have a really, really nice breakout. And so this is another interesting one on a daily chart I want to explain to you guys. Shop, had been in a bull flag pattern, right? We can all see this up move. And hopefully you guys know what a bull flag is. It's going sideways, consolidating, essentially eating time off the clock to likely make a move higher, right? And so we can already have the bias that Shop is bullish. Now, second of all, I want you guys to notice how many daily candles had been made since Shop had broken up, right? So including the breakup candle, you want to count the breakup candle 1, 2, 3, 4, 5, 6, 7. And on the 8th day, it broke up. And so what I want to make, the point I want to make here is that markets move in cycles, right? And two very important time periods are 7 candles and 10 candles. And anything around that number, those two numbers of candles, okay? So we can see shop had 7 candles, consolidation, and then it broke up on the 8th candle. That can give you additional confirmation that the breakout could be a high probability trade. And so again, using these script levels, it's clear shop had a nice breakout in the morning. The morning is one of the best times for these breakouts, guys, because that's when volume is good. It's when price is going to respect levels the most. And so we can see shop has that intraday breakout. It then flags above that level. It gives you a chance to enter right on the high of day from the previous day. That's a perfect entry for shop, right? And as it closes 5, 10, 15 minutes, it becomes even better of a trade, right? Now, I can't say shop was the best trade, specifically because it had this daily chart candle that I actually rejected from this 381 area. And so because of that, it wasn't really the best risk to reward trade. So, now looking at this, I don't know if I would have taken this trade myself. Actually, I didn't. I actually saw this breakout and didn't take it. And mainly because of that. Yes, it did work out. But in the moment, that's not really a trade you want to take. You want to keep your eye on those daily levels, guys. And when you're intraday trading, you really want to look at the most recent days. And if there's been any rejections, any closes, you always want to look to the left, right? Directly to the left. What candle top or bottom or close or open do you see that could potentially be an important level intraday? And so we can see shop actually broke over that level, continued flagging, broke over the next one. Now, this could have been a good risk to reward trade. After it broke the 384, 5-minute breakout, you see the volume and a perfect retest, okay? And that has pretty good room to the next level. Nice $6. That's a good trade. And if you want to see where I got those levels, remember how I said look to the left? So those levels are just wherever price is, look to the left. And where's the closest candle close, open, high, or low? So we're looking at this big red candle. The open of it is 384.02. My level's a tiny bit off. But that will typically be the next important level. Now you'll notice for my top level, I just want to explain how I got this also. So hopefully you can learn to read charts a little bit better. I didn't actually choose the next candle open. Why didn't I choose that? And the reason I didn't choose that is I actually looked at when shop peaked out here. Right? I looked at when shop peaked out. And I thought, okay, well, where's an important level in this area? And I always look at whenever a stock first runs up to an area, where did it first have trouble with? So one for shop is here. We can clearly see that. And you also want to look whenever a stock runs up to a level, it has trouble with it, and then it breaks through right here, and then it comes back to retest that same level later, and it finds support there. And we can see right here, very nice support, right? That's typically an important level. And so this top level uses that exact same theory right here. We can see it comes up to that level, it closes here. The next day comes up, couldn't close above it again. Goes way up, couldn't close above it again. And where I got the actual level from is this candle low. So here we close above the level. We come back. There's a low made at that level. Then there's a close at that level. Then there's a close below a level. And then I want you to see the next couple days, right? Goes up, touches it, goes up, touches it, closes above it, then breaks down and it's gone. So whether it's that exact level or it's somewhere close, I want you guys to see how I found that important level and why I wouldn't have just used the open from this candle here. Okay, so hopefully that makes sense. And that's how you would play shop on this intraday breakout strategy. I think waiting for this break here would have been the best risk to reward trade. The volume still backed it up. So that's my thoughts on shop. And I want to go one last play with you guys from Friday, which is Roku. Roku also had a pretty nice trade here. Again, using these intraday levels paired with a daily chart. What do we see on a daily chart? We see a large drop down. We see a rally. But then what are we seeing here, right? We're seeing a head and shoulders reversal pattern. We're seeing a chart that couldn't get above this large steep drop. So what that typically means is that if it starts making a lower high here, this is looking to break down typically. So already we're looking to have a bearish bias on Roku. We can see it's come and started to try and fill this gap. It's then broken down. It had this little consolidation period for a few days. And then on Thursday, it broke that consolidation period. Whenever you're looking at stocks to trade for intraday breakouts, note a daily chart breakout as well. So this chart had 1, 2, 3, 4, 5, 6 days where it was in a fairly tight range for Roku, and then it broke out, and notice the volume. So the next day is a prime day to be looking for intraday breakouts, and you don't have to guess. You can wait and see what happens, play it intraday, but you can already have the one day of breaking out, and you can expect that volatility will most likely increase. Right, so we can see Roku did have a little fake out in the morning. And, if you happen to take that, let's look at how we would place a stop loss. If we saw this big breakup candle on Roku and we said, okay, let's get long Roku. We'll wait for the retest here and we enter, say, at the very bottom of this candle, right? If you didn't take half of your profits already on this spike, where would you want to enter or exit as a loss, right? And again, I don't believe in exiting at just a price level. I think you should always exit based on the close of a candle. And so really this is up to each individual trader. I like picking a specific intraday level from these scripts to use as a stop loss. It should be based on your risk tolerance, your own personal risk tolerance. If you want to play breakouts and you want to use the breakout level as your stop loss, so as soon as Roku closes below the pre-market highs, you're out. That's a good option. Sometimes you can get faked out though, and the stock will continue on its way. I just want to warn you guys. Sometimes it's better if it's close enough to use a gap like here, to use pre-market lows. It really depends how far away they are from each other and how much risk you can take personally on that specific trade. But with these intraday levels, hopefully if you guys like these, you can use those scripts and just get a feel for how much risk you would like taking. Usually I try to use maybe one intraday level away from where I entered. Sometimes if I'm in a big position, I use the breakout level. I would use the pre-market high and I'd be out right here. It all depends, but hopefully you guys can understand, especially whatever time frame you enter on, you need to wait for a close below your stop loss. That's my recommendation. Not everybody likes that, but I think it gives the best confirmation of if a stock has really failed its breakout. And so, okay, on the other side, on the short side here, let's look at Roku. And again, we might not want to enter Roku after it fails its breakout. Why? Because there's a gap, right? The close of the previous day, not very far away. We don't know if it's going to hit that and bounce away. And so that's not a very good risk to reward. It's a very tiny scalp. And if it ends up being a loser, it would be a bigger loser than a winner. So we don't want to focus on that. What we want to do is look for the best risk to reward trade. And so here, I mean, it's pretty easy with these intraday lines and then just marking your own daily lines. You can easily see where the biggest gap is, right? It's right here. It's very, very clear. And, you know, this is just a retracement from the recent lows to the highs. I recommend using these guys, especially the 50% and the 61.8. They tend to be important levels, especially on a big daily chart move like this. Very important to have those guys. So yeah, and then my other level I have marked here is simply a gap that is still left open. You can see the close of this red candle. Price has never come down to fill it yet. So I had that marked. So what we want to do is we want to wait for a break below that gap. And you can see we get it right here on this candle. And so again, stop loss. If you enter here, you need to at least make your stop loss the pink line, which is the low of day from the previous day. It's very close, and it's not out of the ordinary for price to maybe come back and retest that, right? So you could enter a full position here, or maybe a half, wait for retest, half, and then be in full right here. And then personally, I think my stop loss, it would either be the pink line or the pre-market lows in this case. And it really depends, again, on your own risk tolerance. How much do you want to risk for how much you might get as a reward? So here, you're looking at, down to the 50% retrace, it's about a 2% move. Down to the pre-market lows is a 1.5% move, or up to the pre-market lows. Up to the low of day is a 0.5% move, 0.5%. So if you want to go for a 2% reward and only have a 0.5% risk right here as a stop, that's a very good trade, guys. That's what you want to see, right? And notice the volume picking up as it breaks down. And especially here, notice the volume. And once again, volume, volume, volume. Volume is always important. Make sure you're seeing spikes in volume whenever this breakout is occurring that you're trying to trade. Make sure the volume confirms. Okay. Yeah, guys, I mean, that's pretty much how I play intraday breakouts. And again, just to reiterate, always look to the left. You can see the next level after the 50% retrace would be the low of this day at 132.4. You can see it made a low of the day at 132.16. Pretty damn close. That's where you could exit another part or all of your position since it was the end of the day. And yeah, I mean, that's how I intraday trade breakouts using daily chart for bias and for important levels, and using these intraday levels for the intraday breakouts. And again, when something's not as volatile as Roku, 15-minute closes, 10-minute closes, even 30-minute closes sometimes, guys. See how Roku didn't close 30 minutes over that level. 30-minute closes can also be very, very important, but sometimes you'll miss a large part of a move if you wait for a 30-minute close. It really just depends. You guys get your own feel for it. No strategy is perfect. Every strategy has some flaws. You will get faked out sometimes with this strategy. That's a part of trading, guys. You have to know how to manage your risk and enter trades with an appropriate size so that taking losses are okay. But again, using your daily chart analysis mixed with volume confirmation and waiting for those closes, looking for the best risk to reward, you will profit with this strategy in the long run. So yeah, hope you guys like this. One last thing. I have here my Instagram. It's going to be in the bio as well. And I'm actually doing a giveaway, guys. It's right here, this picture. If you guys send me a DM with your email address, you will be entered to win my trading guide that I'm actually working on right now. It's going to be released later in December. It's going to be $39 for the holiday season. If you guys want to pay, I would greatly appreciate that as well. But I'm doing a giveaway. I'm doing a raffle. There's about 50 people or so that have already entered. And yeah, if you guys go follow me and just DM me your email and just say you want to be entered for the raffle for the trading guide, and that winner is going to be announced in about a week and a half or so. I'm still working on the guide, so when that gets done, the raffle winner will be announced, okay? So yeah, thank you guys for watching. Hope you guys have a great rest of your weekend, and happy trading. See you guys.